Just as investors thought the worst of the European debt crisis had passed, signs are emerging that the crisis may be reviving. After touching a 14-month high of $1.37, the euro has pulled back. Yields on Spanish and Italian government bonds, an indicator of market sentiment towards Europe, have started creeping higher again in the wake of concerns about political scandal in Spain and Italy's banking sector. So is this merely an aftershock or the rumblings of a crisis that's about to erupt again? Here to shed some light is Domenico Lombardi, Senior Fellow at the Brookings Institution and President of the Oxford Institute for Economic Policy. Domenico, welcome to the program. It's great to have you.
Thanks for having me.
European Central Bank President Mario Draghi declared in January that the worst of the euro crisis is behind us, yet we're starting to see yields on Italian and Spanish debt rise. Is the crisis back from remission? What's your sense of the trajectory of the crisis for 2013?
There is no doubt that the crisis is not over, and it might have been even premature to say that it was. What we are seeing now is that first there are signs of uncertainty, political instability looming at the horizon. Italy is going to go through general elections in about a couple of weeks from now. There is a banking scandal, as you were referring to, but most importantly, growth prospects for the distressed economies of Southern Europe are still non-existent. If you take the case of Italy and Spain, this year Italy is gonna contract by 1.5%. The official estimates say only 1%, but I think it's gonna be much more than that. And Spain, the IMF says that the GDP is going to contract by 1.5%.
Domenico, how stressed is the banking system now in Europe?
There have been some, very weak sign of improvement. Compared to the very gloomy outlook that the banking industry was experiencing at the apex of the crisis. The ECB has been very instrumental in terms of providing essentially de facto unlimited liquidity to the euro area banking system. That said, with the euro area economy which has essentially flat growth prospects, the banking sector can never be in a very healthy situation, because especially in the southern part of the Eurozone, banks might go through further distress because the quality of their loan portfolio is certainly going to be affected by firms that are being shut down, firms that are losing money, and so on and so forth.
Would you expect yields for Spain and Italy's government bonds to back up? We are starting to see them come back a little bit. Would you expect them to go back to some of maybe those record levels that we saw back in the middle of 2012?
Well, I think there are two issues. There is a more short-term issue that is related to the Italian political elections. If the outcome is a very fragmented one, if there is no clear winner, if there is one of the two chambers of the Italian parliament in which there is no clear majority, certainly this will have an impact on Italian yields. In Spain, the Spanish authorities have been very, smart in trying to delaying adjustment, in trying to delaying painful reforms, and they have bought time. But clearly, this strategy, although it seems to have been working so far, cannot be, kept indefinitely. And at a certain moment, there will be a moment of truth. Right now there is really no exit strategy, because the only exit strategy seems to be you have to fiscally consolidate, you have to dampen domestic demand, but if you don't implement structural reforms that mitigate the contractionary effect of fiscal policies, if you don't implement the structural reforms that increase the growth, the potential rate of growth, clearly, these economies are not going to have significant growth prospects, and the sustainability of their debt will be put into questions by market investors sooner or later.
Right, and you mentioned there's no exit strategy. Obviously, Mario Draghi, the various governments within the euro are committed to trying to keep the euro together right now. But what's your sense maybe 5 years from now? Do you think that the euro does fall apart if, we can't get a fiscal pact together here? They're having issues implementing that. What's your sense?
I think the odds of a euro breakup have sort of shifted, to the medium term. Until a few months ago, there were expectations that the euro could break up at any moment. The interventions by the ECB, its willingness to potentially provide unlimited support to the distressed economies of the Eurozone has clearly changed that dynamics. And now we have seen that yields have, at least recently, stabilized to some extent. That said, the ECB has just bought time for the national authorities to implement significant reforms, structural reforms, growth-enhancing reforms. And if national authorities do not grab this opportunity, in the end, we're going to go through a decade of lost growth, a prolonged deflationary period, which is going to erode the popular consensus for the single currency itself.
What is your outlook for France this year? We recently heard a minister come out and said that France is bankrupt. Certainly there's some labor law issues going on in France. What's your sense?
France has been, very effective in keeping itself, to the extent possible, out of the crisis. Sooner or later, market investors are going to focus on France. They will realize that France has been doing very, very little, if nothing at all, in terms of reforms, in terms of structural reforms. On top of that, if you look at fiscal data, fiscal consolidation efforts, the French authorities plan to achieve a balanced budget only by 2017. If you take the case of Italy, the authorities will be reaching a substantially balanced budget in structural terms by the end of this year. And on the other hand, France still remains vulnerable to the possible escalation of the crisis in Spain and in Italy. In particular, the French banking system is heavily exposed towards Italy, both in terms of Italian sovereign bond holdings in their own French banks, as well as towards the Italian banking system through stakes that the French banks have vis-a-vis individual Italian banks.
Domenico, thanks so much for your excellent insight. I hope to see you soon.
Thank you. Thanks for having me.
Domenico Lombardi, Senior Fellow at the Brookings Institution and President of the Oxford Institute for Economic Policy.